You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you are doing well for this episode number 399. Kind of crazy, right? Almost 400 episodes. And I'm going to celebrate that with tomorrow, episode 400 for my birthday. Kind of ironic, but anyways, that's going to be cool. So today we're talking about a question that I received for my private webinar at DSR that happened yesterday. So every month I have, besides summertime, so yesterday was like a big thing because it was my first webinar since June with my DSR members. So they get to ask me all the questions they want and they get to send it to me in advance. So yesterday, again, we got, like 75 questions answered, something like that. That was like more than 2 hours webinar. Always a lot of fun. And one of them was looking at my top 10 holdings across all my portfolios. What would be the company that I would invest the most, like today, like that I would be willing to overweight? So of course, if I look at my top 10, I manage about 35 stocks across all my portfolios. So an ideal position is about 3 to 3.5%. So when I look at my smallest position of the top 10, so Visa, TELUS, and BlackRock, they are between 3.4 and 3.9% of my portfolio. So they're right on that target. Anything above this for the top 7, they all have a higher weight. So it starts with Apple at almost 10%, so 9.83, 10% being my limit. So if Apple keeps on growing by the end of this year, well, I will have to sell 1 or 2% of my portfolio of the value that I have invested in Apple to trim it back to roughly 8% and keep on going. I did that already twice. It would be my third time. I did that also with Alimentation Couche-Tard, which is my number 2 at 7.6% right now. Never did it with National Bank. That is my third largest position at 6%. And I did trim a little bit of Microsoft in 2021. Right now it's at 5.26%. So not too bad. In the 4% range, I have the rest of the top 7. So Costco, Brookfield, Constellation Software. So which one among this crazy list I would be willing to invest? So let's start with those that I'm happy with their weighting at this time, and I would not be willing to add more. First one, TELUS. TELUS is my 9th largest holding, so regular position at 3.8%. Right now, it has enough risk. It has I think that TELUS will not continue to increase its dividend by 7% per year starting in 2025, likely going to go back maybe like to 3-4%. That would be a lot. That would make a lot more sense, to be honest, between you and me. So I'm thinking more about like from a management perspective and not from an investor. As an investor, of course, I would like to get more and more dividend growth, but if I want to be realistic and I'm thinking about like the long-term like path for the company, increasing the dividend by 7% a year, not a good idea. So this one, I'm willing to leave it there. It's good. I monitor it. It's probably my less favorite position among my top 10. So we're going to see how it plays out. BlackRock. So BlackRock had a weak dividend growth over the past 2 years. So for that reason, I'm not willing to invest more in it. It is a leader in its market. It has like a very sticky business. I love the ETF business model as well. I love Aladdin that is helping professional portfolio managers to manage their risk. But due to a slower dividend growth, for this one, I'm going to leave it there. For a similar reason, I would leave Constellation Software at 4.3% of my portfolio. That was a pretty solid buy. I love the dividend triangle besides the dividend. Mind you, It's also an exception in my portfolio. So I always want to have like 90% of my portfolio focused on dividend growers. Constellation Software being one exception here, because it doesn't grow its dividend, but it shows like very solid business model, grow by acquisition on many like small deals in the technology industry. It also has a high PE ratio. For those reasons, I would leave it there. Super happy with the position, but I'm not going to move it. Speaking of high PE ratio, Costco, another one that was a great success. I added it not too long ago in 23. And man, wow, that is skyrocketing. I love the business model. I love the stickiness. I love the membership. There is plenty of growth potential, but right now it's trading a lot higher than its usual PE ratio. The PE ratio was already high. Now it's like just going above and beyond. So another one that I would leave at this point. I'm at like 4.6% of all my assets. That's more than enough. That's great. I'm good with that as well. And by the way, I'm not saying I would sell those. I'm super happy. If I don't like a position, I would get rid of it. So even if right now TELUS, I have to monitor it every quarter, I'm still very happy to have it in my portfolio, and I think it can turn things around. If not, I would have sold it a long time ago. Another one that I would not go for more would be Brookfield. So Brookfield BN, I know, sorry, newcomer investor, fellow podcaster and friend on Twitter, X, but I'm okay with 4.4% in Brookfield. I also have like smaller investment in Brookfield Renewable and Brookfield Infrastructure. And one common risk that we have here when we're thinking about Brookfield is the opaqueness of the financial statements. So that is like number one risk here. So at 4.4, I'm good with that position, but I'm not willing to go more than that. So if it continues to drive, so be it. If not, I'm not going to add capitals. What about the others, like the classic largest position, my top four? So Apple with 9.3. This one I would likely trim, so I cannot really add to this one. Couche-Tard at 7.5, super happy with it. National Bank at 6%, same thing. Microsoft, I've trimmed a little bit once. I'm at 5.26, so all of those are obviously big winners and like they have the weight of my total return on their shoulders. They're doing amazing. I'm super happy with those, but I don't feel like I would put more money into it. So if you made the count right, there's only one left. And that one is the one where if I had extra thousands of dollars, I would put in it in my top 10 if I have to. That would be Visa. Visa, because recurring revenue, double-digit growth, it's like a toll road. It's like the modern way of like railroads, literally, because everybody uses their cards. They're making money on fees. They don't carry on the consumer debt, so they don't have to worry about that. So I just love their business model. They are in a duopoly with MasterCard. And this one's at 3.89% of my portfolio. So I could see it at 5%. I would be super happy. The trick is, I'm already not done in my position in Toromont Industries, so I would not add to any of my top 10. But if I was forced to, that would be my call about Visa, because definitely I see this one thriving for several years going forward. Speaking of thriving, how about we build a portfolio together that will have a dividend income that is stable, reliable, that will continue to grow, and that will fund 100% your retirement? Sounds interesting? Well, if you're about to retire or if you're a young retiree, you want to assist that webinar. Next week on September the 19th, I will host a free webinar on how to build your portfolio for retirement. We're going to talk about the withdrawal mechanics as well, how to shape your portfolio to be able to withdraw money from it without getting hurt by the market, without getting hurt by dividend cuts. This is what we're going to talk about. And you can register at Moose moosemarkets.com/webinar. So moosemarkets.com/webinar. If you're on Shopify or on Apple Podcasts, you can look in the show notes as well. You can register. It's 100% free. And if you register, you will have the link for the replay once it is over. So the next morning, you will receive the replay link. If you don't register, you're not going to receive it. So super important, moosemarkets.com/webinar. All right, Moose, that's enough for today. Tomorrow we are celebrating my birthday with episode number 400. That's going to be crazy. I'm super happy with that. We're going to celebrate together. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose on the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.